Folks, in today's video, we need to break down one specific stock that is going parabolic on a very familiar situation that has caused a lot of other stocks to go parabolic and a very specific catalyst. In today's video, I'm going to break down the stock, the catalyst, and a few ideas on strategy if you do decide to play this. We will also be starting with an update on the market and other plays. Timestamps down below. Let's get right to work. And this video is brought to you by Moomoo, the one-stop trading app that makes everything easier within the stock market and takes your trading to the next level. As a perk to try out their platform, they are offering up to 15 free stocks. If you use our link down below, Australian users can get up to 50 AUD. Okay, so let's go ahead and start with an update on the market. So we did see some selling off today as anxiety is going up ahead of the Fed announcement coming this Wednesday. However, we are starting to see some more predictions of a continuation of this bear market rally overall. JP Morgan made a very, very bold prediction this morning, and according to a Bloomberg piece, which covered what they said, quote, the S&P 500 could surge at least 10% in one day if the central bank raises interest rates by a slower than expected half of a percentage point. And Chair Jerome Powell signals willingness at the press conference to tolerate elevated inflation and a tightening labor market, according to the bank sales team, including Andrew Tyler, predicting a 10% increase in the S&P 500 in one day if the Fed just slightly underdoes their hiking expectations, which are set at 75 points. Well, that's a big stinking deal. But the point is, if the Fed does any sort of smaller version of this where they start talking a little bit, flirting a little bit with a little bit more dovish rhetoric, all of a sudden you get a smaller, reduced version of this 10% in a day uptick. Maybe you get a 3% in a day uptick, and then it continues going on the overall bear market rally. If the Fed decides to take their foot off the brakes at all in any category on any part of the trajectory, and they make that clear on Wednesday, well, all of a sudden you have the grounds for a massive rally and a massive acceleration of the current bear market rally trend. Problem with that, obviously, if inflation doesn't go down in the long term, then all of a sudden the Fed has to come back and screw the market again. But if you're looking at this from a market analysis and spectator perspective, these are things that you got to know. Right now, a lot of fund managers are making the case that the odds are pointing towards a post-FOMC meeting rally versus a post-FOMC meeting dump. According to Bloomberg, of the 6 prior meetings, the S&P 500 rose 4 times on Fed Day and fell on the other 2. And as we talked about yesterday, the CTAs are positioned in place with many buy orders if stocks just go a bit more up. So if you want to know my own personal opinion here, heading into this meeting, these are the 4 most likely outcomes that I see playing out. The first is you get a 75 basis point hike, and the Fed gives clear December expectations on what we are going to be working with at that December meeting. If they give clear guidance, it's probably going to be in line with 50 basis points or 25 basis points. That would be seen as very, very bullish and would result in a nice positive reaction on the S&P 500. Now, the second situation with about the same odds as the first is you get a 75 basis point hike and you get some optionality for December. What is optionality? It means that the Fed leaves open what the rate hike is going to be for the next meeting. Now, the Fed can always decide to change the rate hike at the last minute, as we've seen in the past. But when I'm talking about optionality, I'm meaning that the Fed is refusing to give any clear guidance on what the next meeting is going to be, not even giving a range. They say, oh, we're going to wait for the data. That's a very, very hawkish statement, because it's saying the Fed, if it's just a little bit hotter in November, which it should be, then all of a sudden the Fed's going to go even more hawkish than we otherwise would have factored in. Depending on how hawkish this is, I think this will result in a lot more mixed of a market reaction, probably leaning negative, but we have to see how hawkish the Fed's actual statement is and overall rhetoric is in the speech that they give with these new policy trajectory decisions. Then you have what I see as a very fringe case scenario where you have a 50 basis point hike and clear guidance for what we are doing in December. This would be the first step in what markets would consider a broader Fed pivot. You start reducing the rate at which you increase hikes, and then all of a sudden you go back into the negative, or you wait and see. If the Fed goes back into a wait and see methodology, well, that would be very, very dovish, right? All of a sudden they're like, oh, well, inflation's hot right now, but let's wait a few months to see where inflation goes before we start really hiking again. And then the final situation and decision they could make is a 100 basis point hike and December optionality. This would be extremely negative because markets are not at all factoring in a 100 basis point hike at this coming meeting. And if this comes with optionality for December, which it almost certainly would if they're going to go this aggressive, then that would lead to a whole new round of massive uncertainty. I think this isn't a zero chance because Fed members have previously been very, very upset when you see financial markets easing, going up, and people going back into markets. So I am thinking this is probably a growing chance, and there would be no better way to tighten financial markets again with not just hard power, but also soft power than by doing a 100 basis point hike and by putting a huge new cloud of uncertainty over markets. So yesterday, at the end of our Insanity Incoming video, we gave our take on the hottest trades heading into this week, and we made the forecast that the TA and overall setup on lovely GME and other traditional meme revenge trades like AMC. We made the forecast that the chart suggested we would see a rally-to soon. And we saw that first attempt this morning. Lo and behold, Bloomberg headline quote, GameStop Getty Images surge as meme stock frenzy returns. And you saw a early morning fast pump in AMC to 725 and GME to 34.99, which then ended in a halt. It ran somewhere around 24% this morning. But like we were saying yesterday, this is the only period of time where you haven't had any sizable reversal attempts of contesting the bear trend. This morning was the first small example of contesting the bear trend, but the last two times you had a slow period after a massive sell-off, you had doubles in share prices, and this was during this overall bear market this year, right? And historically, GME and meme revenge trades and short squeeze candidates overall tend to do very, very well when liquidity starts flowing back into the overall market, which tends to happen, and isn't a rule, but tends to happen when the VIX starts going down a little bit and when the overall market starts getting into a little bit of a bear market rally. And this is kind of what we've seen right now. And thus, this prediction on GME and AMC and these other meme revenge trades, well, I think it's likely to come true. And this was the first evidence of that today. Next, you look at Mullen. Mullen sold off but continued to hold support today. This is a crucial battleground because if she breaks, a lot of the momentum traders start bailing and assuming the momentum cycle is over. But if she can build on top of it this week, very, very bullish sign, right? So continues to be in the game for now. So the stock of the hour that I want to discuss with you is Mr. Getty Images. Getty, which went public via SPAC over the summer, got completely decimated, but today's run declared it in the race to be a new battleground. The context, well, the last 2 weeks for Mr. Getty have been a pretty big deal catalyst-wise. Last Tuesday, Bria, a developer of proprietary AI visual content tools, announced a strategic partnership with Getty, and this is what the founder and CEO of Bria said, quote, "We are proud to partner with Getty Images. Our collaboration will allow for the rapid deployment of AI-powered features across their platform, enabling their customers to quickly and easily get to their ideal image, no matter what their use case or project." This is being sold as something that can help take Getty Images to the next level. And then you have the recommendation of Mr. Kramer on Thursday night, referring to Getty Image Holdings. He said, quote, "I think down here at $4, I'm not an SPAC guy, but this one may be actually worth looking at." I know what you're thinking. Why would Kramer talking about this be positive? Why would we consider that a positive thing? Well, because with potential trades, they trade on the A word, attention, attention, attention. When you get a small cap or relatively small cap that gets all of this attention and has a history of massive hype rallies, well, all of a sudden you get a strong potential of another hype rally. And after this mention, you already got a 39% run. Never doubt the ability of attention to cause spikes in small cap stocks. The more media covers it and the more people talk about it, the more attention they get and the more the stocks usually spike. And if it's a tight float, it spikes a lot more than otherwise it would. And if you look at this past year, previous runs have lasted like a day or just an extended hours period and then completely dumped afterwards. However, this one is a bit different in the sense that you had a buildup of momentum a few days beforehand. Sure, you still got that explosive growth this morning, but the buildup was really the last week or so, especially after Thursday. And usually when you see some buildup, it tends to correlate with longer lasting momentum versus a stock that just goes up 100% or 20% randomly in a day and then goes back down the next day. If that happens, that's just a short-term catalyst bump. But if you have something that builds up a bit of momentum, then that means that the momentum is more likely to stick around for a while. For example, if this decides to go into a take profit cycle tomorrow morning or Wednesday morning, it may take Getty out of commission for 3 or 4 days, but if it can retain support that is higher than previous resistance levels, you're still retaining the overall momentum setup, right? This could sell off all the way to 530 and still be considered a momentum setup. So there's a lot of room for this to breathe and still be a potential play when you're looking at the week over week, day over day momentum trend. And you look at the options chain dating out to November 18th, the only call options you have any real concentration in right now is at the 10 and 1250 strike prices, nearly 2x the current price at the higher end of that, right? And this is for 3 weeks out. So that tells me that markets are starting to anticipate this being a longer-winded battlefield, which means once this does sell off, you get your next round of speculators waiting for the green light to plow back in, and once they do, So this is my thought process. Let Getty do its thing. If this cycle has another 2 hot sessions ahead of it, great. Ride the momentum if you want. Don't ride it. Who cares? But the key play will be once it starts dying off dramatically, but then finds support, and I think it very much will. Probably sometime before the end of this week or into next week, you're going to see that take profit period, and it's going to find some level of support if it retains above $5. You've got yourself a momentum stock that has shown proof of concept in being able to retain itself, retain its overall momentum, and then you want to look for that confirmation that it's going back up, which means a bounce above that support level, which usually happens a few days after you declare support. Yes, macro environment willing, we need the macro environment in our favor overall for this to really work, but mark my words, this stock is going to bare minimum get a lot of attention in the coming weeks and will be an active battleground if we do get that broader bear market rally. Anyways, folks, that caps off today's video. Let us know what your thoughts are down below. What are your favorite plays heading into the rest of this week? What do you think is going to happen at this Fed meeting on Wednesday? Is the Fed going to go harder, or are they going to let the foot off the brake a little bit? If you want to get up to 15 free stocks with Moomoo, make sure to use that link down below. If you want to join us in ZipTrader U for our step-by-step lessons, private chat, daily morning briefings, and full price target list, I will put a link to that below. Have a good one, folks, and I will see you in the next video.